Hey everybody, and welcome to Stock Abilities. And in this video, I'm going to be covering why Support.com moved over 700% on the premiums. Pretty straightforward short squeeze and implied volatility. I'm going to explain it to you here in this video, so make sure to watch through till the end to get the full impact of how to do this, what platforms to use, and how to optimize your profits on a week-to-week basis. We're going to hop right in here. As you can see, just yesterday through the Trade UI platform, there was a lot of sweeps coming in on the 30 strike. Now, keep in mind that these particular premiums and these particular strike prices, and the reason it was September 17th and not like next week or, literally same day expiration is because SPRT, aka Support.com, only does monthly premiums or monthly contracts there for the expiration. So it might have seemed a little bit far out, but it got a little bit obvious as you would look at the strike prices on the expirations as to why. And you can see all this money flow here. Pretty straightforward here. Green represents calls, basically. And as you can see here, 826, 1130, 1250, and all these different time frames here, and a lot of different money flow on the right there. Hundreds of thousands of dollars were coming in, implying basically a relatively large move. And you can try the platform out here through Trade UI, through the trial for just $2 a day. So that's $28 that you can risk to try this platform, but I'm not going to go too much into that. You can check that out in the link below. We're going to go right into the platform here, though, just to show you here. These were the sweeps. This is the kind of basic filter here. There isn't a lot of complications in that regard. I'm only filtering for 30 days out. And if you did 30 days out, you would have caught this unusual movement here. And you could have risked just a little bit of monies there to make quite a bit of profit there. You could have threw maybe 100 in or something like that, and you probably would have made a couple thousand potentially based on the fact that it was a 700% return. So we're going to hop right in here, though, to give you an idea that it wasn't the earnings or anything like that. It was literally a short squeeze. The earnings were actually bad a few weeks back. And as you can see here, based on MarketWatch's input, it was more of like a limitation from the shorts, and they had to start covering. A lot of technical squeezes were happening here. I'll scroll down to the charts here that they show. The short interest reached 6.18 million shares as of mid-August, according to the latest exchange data, or about 193 times the short interest at the end of 2020. So there was a squeeze coming. How big of a squeeze was relative? It can kind of be based more on like Wall Street bets and all these motivated retail investors on where it might end up going and how high it might be going. The best thing you can probably do now isn't necessarily to buy into it, both either calls or puts, because the IV is going to be high. I'm going to get into that here in just a second, though. But as you can see here, the borrow fee rate is up to 102%, this climbing this morning. Reisenhofer told MarketWatch, he added that Interactive Brokers reported 0 shares available to borrow. So people are restricted from actually trying to short the position, that kind of creates even more of a squeeze because there's just not shares to short. So what is it going to do? It's going to short squeeze, and short squeeze from Investopedia, it's an unusual condition that triggers rapidly rising prices in a stock or other tradable security. For a short squeeze to occur, the security must have an unusual degree of short sellers holding positions on it. Now, it's pretty straightforward. Shorts are shorting, and then it starts popping up, and then they get a little bit scared, so they start covering and covering and covering, and then there's shares that you can't borrow to continue to attempt to short it down, so people just keep upping the price on the ask, and it keeps going up and up and up and up until eventually it cools off, and it might stabilize a little bit, but it could have continuation too. So Support.com isn't necessarily done, but the risk that you're taking now when you're entering Support.com is that you're risking implied volatility crush and implied volatility crush. I'll link to all these sources in the description below, but I'm just going to give a little bit of a brief impact here that you're trading momentum when you trade options. So when you trade options, that momentum is pretty aggressive. So unless it continues that level of momentum, even if you're in calls or puts and it goes up on the calls or down on the puts, you can still lose money because you're paying an amplified premium amount, and that can cost you a lot of monies if you're not careful. So the best thing you can really do is a short-term expiration selling of calls and selling of puts, because then you can sell that IV to someone and you can bank off of that crush value. So it's pretty straightforward here. You want the momentum to continue, but if it looks like it's dying, you want to get out quick. You can maybe get some monies on the spreads and everything, but it's still quite a bit of a risk. And once again, you can try the TradeUI platform at tradeui.com. I'll link to in the description below. That's about all I wanted to cover in this video. It's a pretty straightforward process here. You want to look through and find unusual sweeps like this. You want to look at the short interest as well. Yahoo Finance does that. That's pretty straightforward. If you want to check that out, just Google Yahoo Finance. They list the short interest and everything. Now, keep in mind that short interest tends to be a little bit delayed. So when you're trading, when you're doing this, keep in mind that you are taking a little bit of a risk on following that short interest. But if you want to check out the platform that I'm referring to, it is called tradeui.com. It does more than just following sweeps for finding equivalent meme plays. You can sweep and do these little algorithmic trades here, as you can see on the top here, from squeezes to unusual flow. So it can be adapted to more than just penny stocks if you're interested in options trading in general, without just hoping for that occasional meme that pops up. So check it out in the description below. I hope this video is very informative for you guys. Make sure to like this video and subscribe to the channel if you want more videos just like this, and have a great day.